Hi guys, this is Irfan here from smartincubator.com and welcome to another video. In today's video, again one more time, I want to break down EURUSD and GBPUSD for you and show you exactly what happened during New York session this morning, which in my time is 6 in the morning, 8 a.m. Eastern Standard Time. But before that, let me show you some results for Gold Incubator because since I already showed the results before I start the video, so you can have better understanding of Gold Incubator and see how it's performing on a daily basis. So this is my Facebook account. By the way, you can join our Telegram channel for daily EA updates, and we are up 27% since March 7th. And today's date is March 16th, so 27% on a $1,000 account, which is $279. And this is my VPS account. As you can see, the account is live, and these are the trades that it actually took during during London session for this one, for Gold Incubator. It always trades during London session, and today's date 16th, and these are the trades that it took, and it was probably 2%, 1% up in the past 24 hours, which is absolutely crazy. And these are the trades that it took a few hours ago. So this is our results for Gold Incubator, guys, and you can try it for 7 days for free. The only thing you need to do is to grab your license from smartincubator.com, and then after that send us an email. We'll manually activate your account. So without any further ado, let's get into EURUSD first. So EURUSD on 5-minute time frame at 8 in the morning, this is exactly 8 o'clock when New York session opened. And then after that, you can literally see that we have so many breakout structures in these areas, and we have higher highs and higher lows created around this area. So it means that we have an uptrend market, and just because we have a breakout structure here, and then we have higher highs and higher lows. So this is a 5-minute time frame, but I personally would like to take a look at 15-minute and 1 hour time frame to do a top-down analysis. But even in a 15-minute time frame, I can see the creation of higher highs and higher lows. So it gives me more confidence that the trend is actually uptrend, and we also have this breakout structure here. So the next thing I do is to identify high probability supply and demand zones on both 15-minute and 5-minute time frame. So I always like to start with 15 minutes, and then I actually break it down to 15 minutes. So as you can see, the first high probability order block that we have is this one right here, from here to here, because this is the last bearish candle after it shot up, and then there is a gap between this candle and this zone here. So that's why, just because of this gap between this one and this one, we have a high probability order block. And if you don't know what high probability supply and demands are, I highly recommend you to watch my other videos, especially the first video on my channel that I talk about high probability order blocks, so you can have a better understanding of this structure. So this is for 15-minute time frame, and that's it for this time frame. And if I break it down to 5-minute time frame, I probably can find more high probability order blocks. So in 15 minutes we have this, in 5 minutes we have this candle right here. So this is a candle for 5-minute time frame. So that's a very, very strong one here. And since we have a few breakout structures, our bias should be towards uptrends, right? Because we want to buy the market. And I use order blocks or high probability supply and demand zones and Fibonacci tools. This is my favorite one, and the way I use it is this. So I actually get back to 15-minute time frame to have a more clear picture of the market, and then I use my Fibonacci level to start drawing it from the top, from the bottom all the way to the top, because we have a breakout structure here, and I see where it started. It actually started from here, from this candle here. Where did it end? Exactly right here. See, I have my zero here, my zero here on top, and our 100% level is here, and this is our golden zone. So this is our golden zone, but I'm gonna change the color because I don't want to get it mistaken by high probability order blocks. So this is our golden zone here, and then after that I just wait for the price to see how it reacts. So the way it does is that, as you can see, it actually broke below this zone. In this case, you can do two things, and this is something that I recently started to do. I've never done that. I always stick to my plan: high probability supply demand zones or golden zones. This is what I do. But what I realized recently is that when the price doesn't respect the golden zone, it's most likely that it actually wants to go towards the opposite direction. So what do I mean by that? So when you know that we have a break of a structure here and a break of a structure here, let me show you. In this area and this area, you definitely know that we have a bullish momentum, right? We have a bullish market. But if you use your Fibonacci level and you notice that it didn't respect the golden zone and it literally broke below this level, you can see that it probably wants to go all the way to here to stop out all these buyers who put their stop loss around this area. So what you can do is that you can take your sell position. It's not according to a trend, guys. I know it's a little bit riskier, but based on my understanding, based on my experience that I recently gained about this strategy, you can literally take your sell position and put your stop loss here above this level because it already broke it. It didn't respect it. And then you can take your sell position, your TP somewhere around here. As you can see, this is what happens. So it means that golden zone can play a huge factor in the trend. So when you want to buy the market because you know that they have a bullish trend, you use your Fibonacci level, but it didn't get respected. So you know that the plan is changing right now because you need to trade based on what you see, not based on what you predict. And this is what I see, that it's probably changing the direction of the market, and the liquidity is literally grabbed. And since we have a high probability order block and we know that there's no liquidity around this area anymore, then we can just get out of the position, 1 to 3 risk ratio trade, which is absolutely insane. And then after that, you just wait for the price. See, it literally tapped into this level and then it just went up. You probably want to take your buy position here. I don't know what happens, but this is a high probability order block. This is according to a trend. I'm going to put my stop loss below this level, and then let's see what happens. So it literally kind of tapped into this TP. I don't know what happens. Yeah, it tapped into our take profit because first of all, we are trading a high probability demand zone, and also it's according to the trend. So you can take advantage of both sides, selling and buying. But you can be more patient and just trade according to the trend. I'm not encouraging you to trade opposite the trend, but since the golden zone is broken, then you can take advantage of it and take a sell position, which it did, and it was profitable. But this one is totally fine. But this is 8:50, which is 6:50 my time. Yeah, I could do that too. I could take a buy position here as well and then just leave a runner, but I don't know how long. Look at this. It literally shot up like crazy. So I'm going to remove this, and then what I could do is to take my 1-to-1 trade here and then leave the second one a runner, which is this one. So after it tapped into my TP, I could have moved my stop loss to break even and then leave the second one as a runner. It would be a huge trade, guys. So that's what I'm saying. If you want to take a trade with 3 standard lot size, then you can take 2 1.5 trades. So 1.5 in total, you have 3. And then close the first one after it smash your first TP, which is 1-to-1, and then leave the second one as a runner, and you can close it somewhere around here like the swing high, and then move your stop loss to break even. Beautiful trade. And that's how you can do it, guys. Super easy. I'm not using any indicator, I'm not using anything, just pure price action using zones and Fibonacci level. I hope that you liked this section. So let me show you what happened in GBPUSD. Nothing special happened in GBPUSD, guys. EURUSD was way more interesting today, but it doesn't hurt to take a look at this one as well. I'm going to do a little bit of replay for you to show you exactly what happened. So this is 8 in the morning, definitely bullish. And then we have a high probability order block, probably in 15-minute time frame, that I actually identified it before I start recording. And this is a high probability order block. We have a gap between this candle and this zone here, so we know that there's a gap in between. And I personally wait for the correction to tap into this level, and then I take my line position. Meanwhile, I can also use my Fibonacci level and draw it from here, and then I have my golden zone right here. So let's see how it reacts to this one here. So I'm going to remove this. So it literally tapped into this bullish engulfing candle. If you take your buy position here and put your stop loss somewhere around here and your TP somewhere around here, See, it actually above the swing high, so it's kind of risky because we don't know how long it takes to actually hit this level, and it probably hits this level and then do a reversal, but it's way higher. The TP is way higher than our swing high. Well, let's see what happens. Oh, see, I don't know whether it was so close to hit our stop loss. If I wanted to put my stop loss here, it would be hidden, like absolutely. But I always want to give it more space, put it kind of lower to have more room, and it literally tap into my level, my TP. But I probably wouldn't take this trade, and I didn't because EURUSD looked more clean and I really liked it. But if you want to, you know, kind of take a one-to-one trade with a wide stop loss, then this is a really good way to go for. So let me see how many pips. Yeah, almost 17 pips stop loss, which is not bad, but I probably would have got stopped out if I put my stop loss here, and definitely would do that. But EURUSD looks way more clean. Always have a wide stop loss, guys, because you never know what the market wants to do. And then after that, boom. So it's just playing around, you know, nothing special really happens. And here we have a high probability order block again. So let me see, this is a high probability order block. It's on a golden zone, so let me just change the color. See, it already tapped into this level, but it's very wide. I would never do that. And it's just playing around, it's consolidating right here, which I don't really like. But yeah, this would be a good trade, not bad. And after that, look at this. The second high probability order block formed, the price tapped into this level, bullish engulfing candle, boom, it went up. But I didn't want to wait that long. I would just prefer to go for EURUSD and then be done for day. So that's it for guys for this video. I broke down GBPUSD and EURUSD for you. I hope that you liked this video. If you did, give me a thumbs up, subscribe to my channel, and turn on the notification bell so next time when I upload a video, you'll get notified super fast. And about Goldie Incubator, you know what to do. Check out our website, see if it's a good fit for you or not. Try it for 7 days for free, and then after that, if you're happy, just go ahead and sign up with a real account. So I look forward to hearing back from you, and see you in the next video.